All right, guys and gals, this is Blake Morrow, and you are listening to the Daily Roundup webinar. Excuse me, geez. Okay, let me get my thoughts together here really quick. Actually, let me grab a drink of water. I had to get up and go grab some water, so just stand by. Okay. By the way, how many of you guys, I'm just going to ask you really quick, how many of you guys live in someplace that's fairly warm in the summer, like fairly hot? Hold on, I'm going to the chat here. Just give me a second. Oh, Jason lives in Hotlanta. Didier, you live in in the Pacific. Alexandra lives in Portugal. Brock, you live in Miami. Oh, for Christ's sake, that's hot. Jason said very humid and hot. Yeah, Florida. Egypt, that's not cold. Okay, so let me just say, for those of you guys that live somewhere that's not that's hot, if you get an opportunity, get something like this or get a hydro flask. I carry around, I have two of them, and I carry it around everywhere. And they are this is the one that I have right here. I have two of these, the wide mouth 40 ounce standard, flask, and it just keeps my water cold, and they're awesome. So if you've never, if you've never had one, it's so worth the money, because I fill it up and I put ice in it, and I probably drink like 5 of those a day. So anyway, just if you guys have not, buy one for yourself. You'll be happy that you did. Okay. Anyway, that's obviously neither here nor there. So let's talk a little bit about what's happening today. So, and I'm going to come back to the Aussie yen, because I think the Aussie yen is really important. Let's talk about the dollar. Obviously, the dollar stalled out here, and I'm a little irritated at how the Swiss acted today. It's probably just enough to stop me out, which really ticks me off. But the euro at this point is probably going to be in a consolidation ahead of the Fed. I wouldn't get too terribly excited if we break this trend line. If you notice, a 24% retracement would be 116.50. I think it's doable that tonight we come down like this before bouncing, or as we consolidate ahead of the FOMC. As we consolidate somewhere around here between the 118 and 116.50 level. This is a very bullish move, and a very, you could say it's impulsive. It's very strong. I don't think it makes much sense to fade it because of the macro backdrop behind the euro, right? It's the euro is becoming a solid alternative to the dollar. Solid is actually not the right word. It's becoming more of an alternative, and until the European Union has some sort of bond market with any type of depth, then it's really not going to be a contender for the US dollar. But what has happened over the last couple of weeks has really suggested that the euro is less of a fad or a experiment, and more of something that's here to stay. And that's important when you're talking about the euro versus the US dollar, because the US dollar has its obviously own sets of issues. And we don't have to go into all of them. You can imagine what a lot of them are, but without going into too much depth, I'll just say that the euro is probably taking over, and will continue to take over some of the reserves status from the dollar. Now, does that mean that the euro is going to 160? No, I don't think so. But could that put us back in the mid 120s? I do think so. I think somewhere between you know, whether you're talking about 120 to 135, somewhere up here is probably going to be fair value for the euro, I would think, you know, based on what had happened and transpired over the last couple of weeks. So with that being said, does that mean that, you know, we have to buy the euro right now? No, but I am buying dips. So if I can get a dip down to, you know, anywhere from the next couple of days from 116.50 to 115, this is my buy zone for the euro. Okay, that's it. That's what I'm looking for. I'm really looking for dips down, you know, below 116.50 towards 115, and anywhere in there, depending on what's happening, especially with the FOMC tomorrow, I am looking to buy the euro. So, and I'm hoping we get that opportunity for it to dip down to those levels for us to take advantage of it. Now, what could happen is the Fed could be extremely dovish, and next thing you know, we're all stuck chasing the euro above the 118 level, which, I mean, that could happen too. I'm hoping that doesn't happen. I'm hoping that's not the way it plays out. Okay. But as you can see, the cable's ripping today. We're past the AB equals CD, but I think a lot of this is with the euro sterling move. And what we've seen in the euro pound is that it looked like it was going to break out, and then it just reversed. I was actually going to get pretty bullish the euro sterling on a move above this 127% extension. If you read ForexAnalytix, the analysis on the euro pound, I think I alluded to that yesterday. Basic technical analysis, July 27th. The euro pound is threatening an upside breakout of the triangle with key resistance at 91.75. RSI is starting to trend higher. So like what I was looking for, I was hoping we would see a break above this, you know, 92 pence level, and I was just going to start getting aggressively long. But obviously the pound had something to say about that, and the cable, which is above the 200-day moving average and above this trend line. And if I would have just been more patient from last week after trading it on the long side, probably 4 times last week, always making money I don't think I lost money trading the pound on the long side, but I wish I would have hung on to it, because I would have made a lot more money rather than just scalping in and out of it the times that I did. But what we're seeing here is, I think the pound's just playing a little catch up to the euro ahead of the Fed. Now, you know, nothing else has really changed. Aussie, Kiwi, Canadian's pretty weak. I'm surprised the Canadian's as weak as it is, but probably will be bouncing right around here. Anyway, what I'm looking at though is the Aussie yen, and let's talk a little bit about it. So the Aussie yen, and let me bring up the chart so I don't have to do this again on my charts. What I tweeted earlier was this chart. Now, you know, what people on Twitter see versus what you guys see is a little bit different, because I'm showing a very generic chart with nothing on it. But, you know, people are seeing that. Anyway, what you're going to see here is, you guys know the Aussie yen and the stock market tend to be pretty strongly correlated, but the way I'm looking at it right now is this 76.60, really big, you know, either, you know, double top, triple top, whatever it is. It's holding, and the S&P almost looks like a divergent relative strength to me, right? Because the Aussie yen's hitting highs, S&P was not hitting highs. Now you could say it was probably had more to do with the NASDAQ, possibly, whatever. But what I want to point out is, if the stock market starts to roll over, if you know, I'm throwing that if out there, if it starts to roll over, what happens to the Aussie yen? Well, the Aussie yen will probably roll over too. So what am I looking at with the Aussie yen? And this is probably the more important chart here. Okay, so, and let me get rid of this. I don't think we need this anymore. I'm going to get rid of this whole head and shoulder pattern that played out. And let me get rid of this too for now. Okay, so if you see the Aussie yen, the trend line that I'm really concerned with right now is this one. It's the highs from April going through, and you know, this had been the previous triangle support. It all comes in right around 74.80, right? 74.80. Now, what I was thinking was going to happen today is we're going to break the bear flag pattern. We're going to break below 75. It's still early, hasn't happened yet. I thought it was going to make a move. That's why I started, legging into a short. I actually want to be aggressively short the Aussie yen. I've already started a position today. Now, as long as we stay below, you can see this 38% retracement. As long as we can stay below this 38% retracement, that is, should keep the bear flag in play. Okay, and the bear flag points to, 73 and change. It could be even longer than that if, the flag is actually more like that. But you guys get the picture. It points lower, and what it does point to is a break of this this trend line. Now, what other people are probably looking at is other people are looking at the trend line, itself. They're looking at this daily trend line saying, okay, well, if it breaks through that, I'm going to get short. What I want to do is I want to get short before everybody else, because if I can get short here and we break through 75, and then I've got a little bit more of an aggressive position. So like, let's say, I'm short a little bit here, short a little bit more here. And then once we break through here, everybody else starts shorting it. You know what I'm going to do is I'll, stick out some bids, close up some of my position of my short, and then I can, move all my stops to break even, and then try to ride the rest out on a move, on an aggressive move lower. That's how I'm trying to play it. Whether it works out or not is, we'll see. I do need participation with the stock market in order for this to happen. But I still look at like the Aussie US dollar up around 71.70. It's 71.60 right now, but it's up against, pretty good resistance up here. So, I think the risk is the Aussie yen starts to break lower. And if it does break lower, I want to be aggressive as we cut through this trend line. And as we cut through this trend line and everybody starts to really short it aggressively, I will try to cover some up down here like 74.50. I'm sorry, that's 75 through the trend line is 74.80. I'll cover some up here at 74.50, and then I'll try to ride the rest out. But anyway, my goal is to try to get in before everybody else. So if I can get in and have a 20 or 30 pip advantage over the masses that are asses, I'm joking about that. But, if I can get in, into a trade that I have that 20 or 30 pip advantage, I'm going to try to do so based on what I see here, because the bear flag does point to a breakdown. And as long as I have that bear flag playing, that means we have to stay below 76.60, then I'm willing to take a shot at it. So I hope that made sense to you guys. Let's see, Jason said, also served 9 years in the Air Force, spent 4 months in Saudi Arabia, very, very hot, but a dry heat. So I know your pain in 120-degree heat. Yeah, I know this week is going to be 115, 116, which is brutal. When I was in Africa, when I was in Somalia, it was about this heat, except like being in Saudi Arabia, you're probably in gear, which is never fun. And for me, I was like full dress battle gear with rucksacks and everything else. Anyway, Alexander said, I have several. It's very hot here right now. Good. I'm glad you guys do. And Brock said, I saw 45 centigrade in Kuwait. Yeah, that's ridiculous. I mean, it's hot. Desert's hot. Anyway, guys, I want to thank you for joining in with me today. I'm going to let you go. Thank you all always for the support. For those of you that are listening in after the fact, that means you're not ForexAnalytix subscribers, so make sure you join in. It's only $1 for 10 days, and then you can listen live, be part of their chat rooms, and so on and so forth. So, guys, have a great one. Thanks, everybody, and I will see you tomorrow, or in the chat room, or tomorrow morning on the Face webinar.